Hi everybody, welcome back to T.U.B Investing YouTube channel. Today I'm going to do this topic that's on everyone's mind. Recession is coming, so in 2023, so now what should we do, right? This is a continuation of my opinion of investing in 2023 and what I want to do, and the video is in the link description below. Please take a look at it and then you can come here and then rewatch this, right? So without further ado, let me just get to the disclaimer, right? So I'm not a financial advisor, but nevertheless, if you like what I produce, please like, subscribe to my YouTube channel. Like this video as well, thank you very much. And then, so what is my previous take, right? So if you have watched my video, my opinion in 2023 was to focus on what happens when the Fed pivots and economy recovers from the recession, right? You mean if you focus on that, right, then you will know what you want to do, right? So if that happens, you want to keep investing, you want to be invested, right? So one of the things that I mentioned in the video is focus on big tech ETF, continuation into DCA, conviction plays, right? Don't switch into any defensive play because we don't know when the funds will switch out from this defensive plays, which is actually in some sort of bubble, in my opinion. And then if you choose properly in terms of companies, you could have generational wealth, right? I mean, you could make so much money that you wouldn't know what to do with it, right? And then also don't miss out on all these speculation company or turnaround companies that are on its way to turn around, right? Because after all, these are the companies that have been hurt the most right now. So, but having said that, I used to keep saying there is no recession. There is probably no recession in 2023. If you read my blog, you will know that I keep saying about that, right? But however, recently there's many opinions, right? Too many for me to handle. And then I think what happens if the recession really comes, right? If I keep saying no recession, no recession, right? That's probably wrong, right? So what I want to do here is I want to be prepared, right? And after all, one of the main worry that I had is analysts are still very bullish, right? And next year earnings is still actually very high in my opinion. And if they actually lower their expectation, you go this merry-go-round, right? Lower expectation, lower guidance, 20% fall in share price. You know what I've gone through in 2022, you're going through again in 2023. So what we have to do is we must be prepared, right? Because once the analysts do all this adjustment to their target price and saying that things are not as expected, right? To be honest, I don't really care about them because their expectation is not my expectation if I'm on the long term. But as you can see in 2022, a lot of analysts keep changing their target price, keep talking about, flip-flopping between I want to buy or hold, right? So the point right now is we must be prepared. What happens is there's another double whammy, another 20% drop after earnings report, lower target prices. What happens if the interest rate furthermore stays at 2 to 4% in the long term, right? What should we do? So what should we do, right? So be prepared. So what? So if be prepared, right? In my opinion, nothing has actually changed from my previous view, right? That I made in the first video, right? So nothing has changed. Please continue DCA, except that you need to be prepared. So please continue DCA into your conviction plays. Look at the FANG stocks or the ETF, right? If you are not interested in stock selection, right, just go for the ETF, right? So the word here is to continue the dollar cost average, right? Because in my opinion, staying invested is important right now if you are looking to make more money in the future, right? After all, when things are on discount, everybody go and grab, right? You don't see a supermarket that has all the discounted items and nobody just go in, right? Those are called no, everybody will just grab things when things are on discount. Think about what happens if Louis Vuitton is on discount, right? So many people just rush there to buy, right? So my advice right now is to stay invested, right? But you also have to understand, you need to have enough cash for the DCA to happen, right? You need to, so that relates back to you need to have a work, right? You need to, as the recession extends, you need to have enough money for your own living standards and to invest as well. So you need to plan on a longer term basis and you need to create cash flow, which I'll explain a bit later. And also, you need to ensure that the companies in your portfolio can survive and endure over the recession and strive to the moon when the bulls return, right? So what are actually cash call, right? These are other than the regular DCA. I mean, you want to have the ability to call on more cash at a point in time where where you want to double down, for example. So one way is you can put in fixed deposit and expect to take out in 6 months later, or sell long dated call options that will be in the money to get some recurring asset, or you can also buy long dated call options, right? That you can sell in the future, right? And then another way, if you're in Singapore, SSB is an option. This is something that I told my friends, and he said, I got too much cash and I want DCA, right? What should I do? So we can put everything into SSB, but withdraw after that, withdraw monthly for DCA, right? So the ideal cash itself is actually still earning some regardless some returns. Right? It's not a zero return kind of thing, right? Eventually, you need to have a job. You need to earn more cash. You need to just build up your cash flow over this period, right? As you want to invest more, you should really strive to intend to invest more, and then have maintain your living standard and invest more, right? I mean, one way, if what I'm doing now, right? YouTube, blogging, right? To hustling, right? I mean, that's how I see it, right? So that's what I mean by cash cost, right? So actually, I should talk about how to choose these companies right now. But let's wait for the next video, right? And then the next video will be on choosing companies. So please subscribe to this channel and wait for the next video. Before I end it off today, so there's one actually interesting discovery that I had, right? Is that in my opinions video, I actually stated that the Fed actually there was some drop in November in terms of its reverse repo agreements, right? But however, this time around the reverse repo has increased back to 2.3 trillion, right? So there's actually still 2.3 trillion of cash on the sideline that's not invested. And in a way, it's very interesting because this actually coincides with the market that has actually went back on a downtrend, right, in December. So I mean, it's an interesting discovery to me, and it makes me more assured that people are just on the sideline and they are not investing. And once all this, let's just say 1 trillion is added back to the market, right, the market could start going to the bull market again, right? So with that, I like to end this video, and please wait for my next video, and I'll talk about how to select companies during recession, right? So thank you, and please subscribe. Bye.